Yo, what's up guys? Chino here. Alright, so in this lesson we're going to be learning about market structure. We're continuing from where we left. I introduced you to the trading platform. Now I'm going now into the analyzing part, right, where we get to learn how to analyze synthetic indices on TradingView, right? Alright, so like I've said, we are studying the market structure, specifically the reversals. How the market gets to reverse, right? So you're going to realize that if you look to every chart, you realize that it will be trending. It's either going to be trending in a downward direction, in an upward direction, or it might be trending in a sideways direction, right? So in the case that you see your market trending, right, you should know that at some point it's going to exhaust and it will get to a point where it will reverse, right? Either reversing to the upside or reversing to the downside, right? So we want to investigate how our market reverses. So our market is only going to be reversing in two ways. And in this lesson, we're going to study one of the ways that the market gets to reverse, right? Every point you're going to see a reversal. This situation is going to be either this situation or the other situation I will explain in the other lesson, right? So what's going to be happening? The market is going to be forming lower lows, lower highs, lower lows, and lower highs, lower lows, and lower highs, right? Then the market, it will get to a point where it will violate the previous lower high, right? So when the market moves and breaks the previous lower high there, right, the conditions of a downtrend is that the market should be respecting the lower highs, right? It shouldn't break like it was doing here. It shouldn't break the previous lower highs, but the moment it breaks the previous lower highs, that's a violation of trend rules. Then we anticipate a reversal in such scenarios, right? So when it violates that, we say that the market is changing in character, right? So we refer that as change of character, or CHOCH in simpler terms, right? So whenever we see a CHOCH in our market, we anticipate that our market is about to reverse, right? And we take the lowest points or some points, some demand zones that will be in this impulse move, right? And we anticipate that our market is going to correct back to those zones, and we will be picking some buy trades from there, and we will have engaged in an upward trend, right? So our market is shifted from a downtrend to an uptrend, and it shifts in form of a CHOCH. A CHOCH is the one that tells us that our market is now reversing. Then in the case of an uptrend, right, when we see our market beginning to violate these previous lows, right? In the case of an uptrend, we are having higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. And the moment we break or violate the previous higher lows, we are violating the trend rules, right? And when we see that, we anticipate that our market is now reversing from an upward trend to a trend, right? So what we do there, we just put our anticipation there to say that, okay, since they violated this, we anticipate that they're going to come to either to the extreme supply zones or other supply zones that are within this range, and we are going to see our market correcting, right? We refer to this as an impulse move, the first impulse move, right? Then our corrective move, then we are going to take our sales from this region and we are going to be selling like this, right? So this is what we call a CHOCH in market structure that constitutes to our reversals, trend reversals, right? So let's get to the chart and just investigate a few CHOCH that we have in the market for illustration purposes, right? So I will just refer to a trade that I shared in the free platform, WhatsApp free platform, right, of V50S. I shared this one yesterday, right? So I'll just explain what's here. I won't go in depth with the analysis where it's all coming from, but I'll just explain the part that we want for this session. All right. So what was actually happening here is this. What was actually happening here is that we were in an uptrend, right? I won't go back that much. We were in an uptrend like that. Our market was actually forming higher highs like that, right? We are actually forming higher highs like that. All right, it corrected that point, then it went to this point, right? Then eventually they came to this a point, right? So at this point, we realize that our market is beginning to violate this previous law, the last law that we had. Our market is beginning to violate that. So the moment it begins to violate that, we mark that point and we actually call it a CHOCH. That's what we refer to as a CHOCH, right? Then after seeing that, what we do, we go first to the extreme highs, right? And plot those extreme highs as our what? As our supply zone, is our extreme supply zone, right? So this was our extreme supply zone where we expect to get our what? Our sell trades, right? Then in this case, for us to take this trade, we take this symbol for short, then we put it there. This is how our trade was like. Then according to the anticipation, that's how the trade is actually working out. So this one is actually not a short-term trade that we are having here, because the analysis of this was actually coming from the higher time frame. I believe it was on H4. Yes, it was actually on H4. Okay, the structure part of it was actually coming from these zones. Then we had a supply zone that we had taken from this point, and I considered this high as well, and I combined it with this one. It was something like that, right? So on a higher time frame, we had actually gotten into a supply zone, right? Then now we're actually moving to the lower time frame. That happens to be the 15-minute time frame or 30-minute time frame for our what? For our CHOCH, so that we see how we can actually enter our trades. Because before you enter every other trade, there should be a CHOCH that you should come out clearly for you to be sure that my trade is now reversing. So you can actually see that we're actually trading in the range. The moment our price tapped into the range there, we marked this low, then we expected a CHOCH there. The moment you see the CHOCH now, we are taking the CHOCH, and this was the trade, right? So this trade is actually going there to satisfy the 4-hour structure that we have. I anticipate that it will come all the way to those lows like that. This is just the beginning of this trade, right? So this is an example of how we trade CHOCH in the Forex market, right? Okay, guys, so this is how I actually predict the reversals in the Forex market using CHOCH, right? Or change of character, right? Either from the higher time frames or from the lower time frames, the market is going to be reversing. So guys, thank you for watching this video, right? Remember to leave a comment in the comment section, and any requests on such subject, you can actually post the question, then I'll attend you from the comment section, right? Also share the video with your friends, right? If you haven't subscribed, it doesn't cost you anything, just hit the subscribe bell. Thank you.